Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about the total cryptocurrency market capitalization and discuss the worst case scenario for a potential bottom, or at least what I would consider to be the worst case scenario. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Now, I was somewhat skeptical as to whether I should make this video or not, mainly because we have been experiencing a move to the upside recently, but I would be remiss if we did not follow this video series that we've been doing for about a year now, just simply because the risks still are there, and it would be prudent for us as investors to follow this through until either it occurs or there's sufficient evidence to suggest that it's likely not going to occur. So we are going to talk about this. I understand it's not here, it's not going to make me any friends within the cryptoverse, but it is a risk that we at least need to consider, even if it might not be a high probability of occurring. Okay. So one of the things that we've talked about is comparing the cryptocurrency meltdown that we've seen since November of 2021 to what we saw back during the dot-com crash. This video series that we started back in February really began when we had the crypto bull. Now, the crypto bull occurred when a lot of cryptocurrency companies overtook the Super Bowl ad space and began advertising their company. And the reason why this was a red flag is because the dot-com bull, where a lot of dot-com companies overtook the Super Bowl back in the early 2000s, fairly closely marked the major top for the NASDAQ for quite a while. And so the speculation was, well, is it going to mark a major top for crypto in a similar manner? So in this video 11 months ago, we talked about similarities between the crypto bull and the dot-com bull. We noticed that the dot-com, the tech stocks as a whole, their market cap peaked at around 2.948 trillion. Funny enough, the total cryptocurrency market cap also peaked right around that $3 trillion mark. And so it makes us wonder, are there other similarities that we can continue to follow to identify if it's going to continue to play out, and again, what we would consider to be the worst case scenario. One of the things that we discussed throughout this video series was that this bottom in June was likely not the bottom, right? We talked about that quite frequently, and there were plenty of reasons for it, right? Plenty of reasons for it. One of the main reasons, of course, was just that it seems like, a lot of these bear markets, people think that June is the bottom. And again, I thought that June was probably the bottom back in 2018, and it wasn't. And then you see that capitulation in November. And you can see once again that this played out, right? It was not the bottom, despite the fact that a lot of people called for it to be the bottom and were convinced that it was the bottom and found all sorts of data to suggest it was the bottom. It, in fact, was not. And so this is the danger of spending too much time trying to call the bottom. Is you can be right for 5 or 6 months, but it doesn't mean it won't ever go below it, right? And then it went below, sort of to the surprise of a lot of people, and we found ourselves eventually putting in new lows. Okay. The other thing that we mentioned throughout the summer, and one of the things we talked about a lot in the worst case scenario videos, and this will make more sense as we get into it, was that this was not the bottom, but upon the next lower low, it at least becomes a discussion, right? It becomes a discussion. So one of the things that I mentioned is that the next lower low beyond the June low has at least a valid argument to be the bottom. And my suspicion back then was that it'll either be the next lower low or the one after that. And so the one after that is, of course, what I would consider to be the worst case scenario. We followed the video up that we had in February of 2022 with a video about 8 months ago titled the same thing as this video, Where is the Crypto Bottom? Worst Case Scenario. We talked about, where crypto bottomed after the first cycle. If you were to extrapolate the 100-week SMA down, it was basically at the 100, and the 200-week was the second cycle. The 300-week was the third cycle, even though by the time we hit the 300-week SMA, it was higher than where we hit it at the 200-week in December 2018. And we speculated, back when Bitcoin was around 30K, look, we're likely going to go back to at least the 300-week SMA, and we could go below it and go to the 400-week moving average if we continue to sort of step down one of these major weekly moving averages every cycle. So we're going to touch base on that. We followed that video up with another same titled video only 5 months ago, where we discussed these ideas of these 40% rallies, the 50% rallies, and then the 60% rallies, which will again make more sense in a minute. And then finally, the most recent video in this series was put out 2 months ago when we continued to discuss where is the crypto bottom upon putting in a new low. Okay, so where are we today, right? Where are we today? And where does it stand within the context of what we have discussed as the potential worst case scenario? Well, as we talked about, June was in fact not the bottom. November is now up for discussion, and I think it's a more valid debate now than it ever was back in June. Okay, but the purpose of this video is not to spend too much time talking about the November bottom, but it's just to talk about the risk of what happens if we get another low after this, which I think would honestly take a lot of people by surprise if it actually occurred. Again, because from a cyclical point of view, Bitcoin has run its time-based component of its bear market, or at least what we typically see, right? So going back to comparisons with the dot-com crash, there are a lot of similarities that we need to take pay close attention to. One of which is the fact that this first rally over here was about a 40% rally, and it was a bear market rally. It did not mark the bottom. After that, we had a 50% rally that again did not mark the bottom. And then finally, we had a 60% rally, or about a 59% rally, that once again, in the dot-com crash, did not mark the bottom. My speculation in the context of the worst case scenario, if it plays out, is that we're in this move right now, if the worst case scenario, or what I would consider to be it, is if it's going to play out, is that we could be in this move if we eventually roll back over and then put in a final low, which is what I would consider to be the worst case. Where does this compare to the total market cap? Have we seen something similar during this bear market is the question. A 40% move, a 50% move, and then a 60% move, right? We talked about this in the prior videos on the worst case scenario, well before a lot of these moves even occurred. So the first, this one was a 40% move. The second one from this June bottom was about a 50% move. Where are we now? It's not 60% up. It's about 39% up. Meaning, if it's going to follow what we did in the dot-com crash, there still is potential room to the upside, right? If you look at Bitcoin, what you'll notice is that Bitcoin is already up about 53% off of its low. Now, here's an interesting similarity, okay? If you look at the NASDAQ during the dot-com crash, you'll notice that this 60% move occurred, and then we finally rolled over to put in the final major bottom. Look at Bitcoin for a minute. Suppose this is a 60% move. Again, it's already 53% up. Where would a 60% move put us? It would put us right around 25K. Now, what's interesting about 25K is that it's also the other local top that we had back in August. Another interesting component of a 60% move to potentially 25K is that it also corresponds to the 50-week SMA and the 200-week SMA. We are seeing a convergence of both the 50-week moving average and the 200-week moving average on the weekly time frame that Bitcoin has never seen. Now, there was one close call back in 2015 where they almost crossed, but it was avoided. This time, they are starting to get fairly close again, and it seems like they are likely going to cross, marking the first weekly death cross in Bitcoin's history. Again, this is just something that's playing out on the chart. A 60% move would get Bitcoin, though, to the 50-week moving average, would it not? Right? Around 25K, let's say plus or minus $1,000, because you can get wicks, and if it takes longer to get there, then maybe the 50-week will be at 24K. It all depends on how long it takes for us to get there if we're able to make it there. A 60% move gets you to the 50-week moving average. If you go back and look at the NASDAQ, where do you think this 60% move got us? In fact, it was rejected off of the 50-week moving average, right? That's where it got rejected. and it was a 60% move off the low in September of 2001. So you had a 60% rally, and then a rejection off the 50-week, a brief pullback for about a month, and then a secondary rejection off the 50-week moving average, right? It's something we need to pay, at least pay attention to, that if this plays out and Bitcoin rallies on up to 25K or even slightly higher, is it playing out the same way as the NASDAQ did? Now, what would happen if the worst case scenario plays out? Well, note that from this low here, the final bottom occurred about 27% lower. Where would that put the total market cap if we had to go 27% lower than the prior low? It would in fact put us at just over 500 billion. Okay, at just over 500 billion. Furthermore, let's take a look at this. Take a look at the NASDAQ. Again, admittedly, we're cherry picking stuff, okay? But again, if the worst case scenario is going to play out, it has to be because some of the worst things in the market align all together, and it sends it down to those similar valuations. Look at this though. The move here from the NASDAQ down to this local low before the 60% rally, it was a 77% move to the downside, okay? A 77% move. Now take a look at Bitcoin. From its top here, it also was a 77% move to the downside. Admittedly, I know it's cherry picking, but a very similar move, not only in the NASDAQ, 77% move, and then a 60% rally to the 50-week SMA. For Bitcoin, that 60% rally also gets you to the 50-week moving average, right? Still, so very similar setup so far that has not necessarily been disproven. So again, I'm happy to drop the worst case scenario video series if we get more proof that it's no longer going to play out like this, but so far that has not yet occurred, okay? Going further into this comparison, if you take a look at the NASDAQ, you'll also notice that we were below the 200-week SMA as well when it occurred, right? We had already fallen below it, just like Bitcoin has, right? Bitcoin is already well below. It's actually a lot closer, but it is still below the 200-week moving average. In the same way, the total crypto market cap is also right around the 200-week moving average, right? So it's slightly above it. Bitcoin is below it. Total is already slightly above it, but still well below the 50-week, okay? Still well below the 50-week. If you were to take a look at total 3, which does not include Bitcoin or Ethereum, it's also well below the 50-week and just above the 200-week, okay? So just to sort of show you the whole picture. Some of these are above the 200-week. Bitcoin is in fact not. Now, the next thing I want to show you, if you look at the NASDAQ and we take a look, and this is dubious at best, the relative strength index is never, it's never the only indicator that you want to look at, because it can easily tell you things that make you think you know exactly what's going to happen, but in fact something completely different plays out. Look at this, you can see that these tech stocks were basically in this macro downtrend for a long time, holding resistance on this trend line. When it finally broke, when the NASDAQ finally broke out to the upside, over here, it was a bull market. The problem is that you could have drawn this a different way before you got to that point, and you could have said that, we're putting in lower highs on the weekly RSI, and that once it breaks out, it means the bottom's in. But it did not mean the bottom was in, right? It rallied back up to a weekly RSI of around 54 before going back down. Now, what's funny is that even though the weekly RSI bottomed in April or so of 2001, it came back down here more or less at a double bottom, but the price was a lot lower. So that's why you can't put a lot of weight into the RSI, because just because it double bottoms doesn't mean the price double bottoms. But again, it rallied after the breakout from the weekly RSI downtrend, or at least, it is, again, it's a dubious way to look at it. You could obviously draw it a lot of different ways. You could draw it like this and say that it came back down and touch the weekly downtrend line before rallying back up. You could draw it like this and say that it just rallied back up. But note that it went to around that 54 level. If you take a look at the total cryptocurrency market cap, and let me pull back up total. So if you look at this, and we take a look at the weekly RSI, so I'm just going to clean this up a little bit so we can see it a bit more clearly. Again, also following sort of one of these macro downtrend lines, it breaks out to the upside, and it's right around that 53 to 54 level. So it still could move up a little bit and still stay within the context of what the NASDAQ did, because the NASDAQ went all the way up to right around 54 or so. Total RSI on the weekly is just below 54, so like 53.65. So still some room to make it to the 50 week if it wants to, but it is not there just yet. And so the argument is that if we go back down eventually and double bottom on the weekly RSI, while it might be a double bottom on the weekly RSI, it could be a lower low on the total crypto market cap if it were to play out within the context of the worst case scenario discussion. Okay, so it's all within the context of that with somewhat cherry-picked data, admittedly. Okay, I'm not trying to ignore that aspect of it. I fully recognize that it is somewhat cherry-picked. So then continuing on, the other element that I wanted to discuss is the time frame, because the time frame on this is somewhat different. But here's something interesting. If you take the time frame and you were to say take a ratio of it from this top to this bottom here that marked the 60% rally, it was about 79 weeks, right? Then this time frame from this bottom to the actual bottom was 55. So you essentially could say, all right, you have 79 weeks, right? 79 weeks over 55 weeks. Everyone always likes how I draw the fives, right? 79 over 55 equals, and then you go over on the total, how long did it take us to potentially get to the 60% rally, which remains to be seen, admittedly. But if we take a time frame here to this bottom here, it was about 54 weeks. So going over to, let me go back over to the NASDAQ really quick. So again, 54 weeks. So if you were to say 79 over 55 equals 54 over X, and dubious speculation at its finest, right? But to get a time frame on when the bottom would occur, if it's spaced out in an equivalent fashion, just the ratios are somewhat different. So you say 79 over 55 equals 54 over X. So 79 over 55 equals 54 over X. This is Wolfram Alpha, of course. And then if we solve for X, I can get the approximate form here. It says 37 weeks, so somewhere between 37 and 38 weeks. So then going over here, where would that put a future bottom if the bottom is not in, right? This is assuming if the bottom is not in. Let's say 37 to 38 weeks, it would actually put it out in August of 2023. August of 2023 is when that would occur if it were to play out on a similar timescale. What's interesting is, Bitcoin, and I want to look at this in the context of Bitcoin here first, or at least mainly, because like Bitcoin is sort of broken out of this downtrend line. Now you could draw this in a way that you could say it hasn't broken out. So you could easily draw it like this and say it has not broken out. But if you draw it like this and get it a bit tighter on the trend line here and say that it already broke out, sometimes when these things break out, they rally for a little bit, but then they can always fall back and back test the trend line, right? So, I mean, if I were to try to eyeball this, if it were August of 2023, like right around here, and it rallies on up and then sort of sits up here for a while and then comes back down, and then that ends up being the bottom, it would also actually correspond to, sort of hitting this trend line again, like the low, the lower low, and then maybe one last low again if November is not the bottom, right? This is all, of course, assuming November is not the bottom, which admittedly, again, it could be. So the worst case scenario is something like that. Now, we need to think about what would cause some. Actually, before we get into the causation of it, in one of those videos we talked about visiting, the 100, the 200, the 300, and the 400. If you take a look here at those moving averages, again, within the first cycle, oh, look at this, we have more data now. So before they didn't even have this data, but now we actually have more data on here. It looks like they've added some data down here. So yeah, now we don't have to extrapolate, right? The 100 week is what held during the first cycle. The 200 week is more or less what held during the second cycle. The 300 week here is what held during the third. And so then the question becomes, well, are we going to go to the 400 week moving average? We already went below the 300. Now the 400 currently sits at around $14,000. So again, if Bitcoin gets rejected off the 200 week and then comes back down here, that could, again, that could potentially mark a worst case scenario outcome. Okay. Again, it's just something to consider. I'm not saying it has to play out, but it's something to consider. Now then, what are we talking about here? Like, why would Bitcoin go to a new low? The contagion events have mostly seemingly played out. I mean, we had, BlockFi, Celsius, Luna, and the UST collapse, Voyager, FTX. It goes on and on and on. And recently, even with Genesis, right? So all of that happened, and Bitcoin's still at 23K. So arguably, the contagion events have already been priced in or played themselves out. So then what risk could there be? Well, of course, if you've watched my channel at all, you'll know the risk is a recession, right? A recession is what ultimately could be what sends risk assets into decline sometime later this year. Now, the problem with this idea is that we just got, US GDP estimate for Q4, and it was quite good. There's not really a lot of evidence to suggest, and we've said this for a long time, that the US is in a recession right now, right? And we've mentioned this for many, many quarters, is that there's not a lot of evidence just yet that the United States is in a recession. It doesn't mean we're not going to get into one, but right now I don't really think you can make the case that we've been in one in 2022. Now, you could make the case that it'll occur in 2023. Now, what evidence is there to suggest that a recession could come? Well, if you were to take a look at again, the inversion of the yield curve and treasury yield spreads, it takes about 12 months or so. The lag time on the inversion to the uninversion is about 12 to 18 months. This inverted in a sustained way back in July, okay? So that means that this coming July is potentially a candidate for when the recession could start, right? This July, this summer, basically. So Q3 of 2023, the latter half of the year. So then you sort of have to think about this idea of, well, if this plays out to within that time-based component that we discussed, where it could take until August, right? You could use that to mean that Bitcoin is could easily chop around at some of these higher valuations for months before it could play out. Take a look at the NASDAQ, right? When this bottom here was in September of 2001, we didn't go below it until June of 2002. I mean, that was almost a year, right? Almost a year. This bear market actually lasted a really long time. 133 weeks. The total crypto market cap has not been anywhere close to that long, right? It's been 63 weeks. Now, I do want to play devil's advocate a little bit because, again, admittedly, it's cherry-picked data, right? Let's play devil's advocate a little bit. The NASDAQ, 133-week bear market. Total crypto market cap, 63 weeks. This assumes that the bear market's not over, right? If the bear market's over, then it was over after only, 53 weeks, right? So 63 weeks. A lot of indicators would say, though, that this was the top back over here in May, right? So then you could argue that the bear market is already 89 weeks in versus 133 weeks. So you're talking about, another 40 weeks would still be about the same as what the dot-com crash experienced. So if it were to go the same length of time as 133 weeks from the first peak, that would put it out in November. Pretty long bear market, right? That would be a pretty long bear market. And again, it's probably not going to be a lot of people's base case, but it is something that we need to consider as a potential outcome, even if it does not occur. As I said before, the first low to really consider as a potential bottom is the one that comes after the June low, right? After the June low. And then it's just a question of, for me, is this it, or is it the one after this, which again, I think would be the worst case. So that would be a 133-week bear market. To play devil's advocate, though, if you were to talk about this being the peak, right? If this is the peak, then that means that this would just be a bear market rally, right? And so if this is a bear market rally, then perhaps we're one rally further along into the bear market than you would otherwise believe. The counterpoint to that, of course, is most people are going to say, well, price action is king. Who's going to say the bear market starts here when we technically put in a new high just a few months later, right? So, I mean, if you're not looking at any indicators, you would just look at this and say, well, I mean, the bear market started in November of 2021. why would people say it occurred here when you continue to rally on up for a few months just after that? But that is one thing that we should at least consider when continuing to discuss this. Now, some other ways you could play devil's advocate is to go look at some of the other charts. And by the way, if you remember early on in this video, we talked about how how the NASDAQ dropped here from the peak 83%, right? 83% from the peak. This first drop, 77%, which again is the same thing that Bitcoin has done so far, right? A 77% drop from the peak to go 83% down. Where would it put it? It would put it right around $12,000 or so. That would be about an 83% pullback on Bitcoin, would be about $12,000. I'm not saying it has to go that low. Maybe we would hold at the 400 week if it eventually rolls over. But that is something to, again, to pay attention to, is that you had that 77% drawdown, a bounce back up to the 50 week, and then it ultimately rolled over to put in that final low, right? And it occurred a long time later, which is why why bear markets are quite brutal, because they can take so long to play out sometimes. Now, again, if you look at the S&P, one of the things I want to draw your attention to that perhaps not enough people are talking about is the potential weekly death cross. This is something Bitcoin's never experienced. It came close back over here, but it has not really ever occurred. Now, unfortunately, because it's never occurred, we don't know, what to make of it with regards to Bitcoin. But we have the S&P 500, which has experienced several of these weekly death crosses, and typically when it crosses, from that point, you see another 20 to 30% move to the downside, right? This was 20%, this was 33% during a period of high inflation. If you go over here to the dot-com crash, we saw another 19% move from when it crossed. In the financial crisis, we saw another 27% move to the downside from when it crossed. Hasn't crossed yet. Maybe it gets avoided, but they are getting relatively close, right? They are getting relatively close right now. And so if it's not avoided, then then perhaps Bitcoin will play out in a somewhat similar fashion. That's something else we have to look at is, look, we've never had a weekly death cross with Bitcoin. We are getting a golden cross soon on the daily time frame, by the way. So that's at least for the people who want to be more optimistic, just to pull it up, not to just say it, but if you look at the daily time frame, we are potentially going to see a golden cross if this continues up in the at the rate at the angle of attack that it currently is. It shouldn't take too much longer to see the 50-day cross the 200-day. But even remember, if you look at prior cycles, the first cycle, it took one golden cross to get the next bull market started, right? So it took one golden cross before the bull market started. The next cycle, it took two, right? Two. The next cycle, guess. It took three. 1, 2, and 3. If this one's going to be 3 or 4, then that means we still have, quite a bit of chop to do in the future. So that would just sort of be the first attempt at getting a golden cross here. Again, I'm not saying that it's going to take 3 or 4 necessarily, but you can see that just because you get a golden cross does not mean we're about to head to new highs immediately. So again, something to think about. Another way that I want to look at this is the Bitcoin dominance. If you were to look at the dominance like this, and you looked at the last cycle, remember, the dominance started to surge here on a Bitcoin rally. And that Bitcoin rally was like a 40 or 50% move. Right here. It was about a 45% move. And guess what? Guess what about that move, that 45% move? It also rallied to the 50-week SMA, and that's where it got rejected. At the 50-week is where Bitcoin got rejected back in 2018. It was on the move down that the dominance continued to go up, and then when it moved sideways. So if you go look at the dominance here, and you overlay the Bitcoin price, and we draw a line here at the peak, it occurred at around a dominance of what, like 40, somewhere between 48 to 50% or so. What's interesting about that is that means that if Bitcoin wants to rally on up to 24K, 25K, or 26K, it might be accompanied by a rise in the Bitcoin dominance, just like it was over here. And then perhaps the dominance will continue to rise if it gets rejected off the 50-week and then comes back down, right? So that's another perspective to have on this, is that, historically, the market needs to get cleansed of some of the, less useful projects. And one way for it to do that is for Bitcoin to just chop them up for a while and then to ultimately come out stronger on the other side. Personally, if I'm just being completely honest, I don't really think we're here or here. This is the main argument is Bitcoin at this point? So is Bitcoin here or is it here? Honestly, it's probably neither, right? Why? Because it's a different time, different market conditions. Look at what happened during prior tests of the 50-week SMA. We've got 3 examples after basically a long bear market. 3 examples. The first one, rejection, then a higher low and blast off. The second one, rejection, double bottom, then go. The third one, we hesitated, got through it, ultimately capitulated back down below it, and then put in a slightly higher low. Okay, we don't have a lot of data on it, but normally the 50-week offers some resistance, at least on the first attempt. Even in 2019, when we got by it, we still hesitated at it for about a month before making our way through it. Where does the 50-week sit? Just above 25K, which also corresponds to this prior local high right here. Okay? So again, the main risk is just, do we get a recession or not? It doesn't seem like we're in one right now. The inversion of the yield curve suggests that one will likely come at some point. The inversion on the 3-month and the 10-year is basically lower than it's been in 40 years. Again, when you come out of it, it typically means you're in a recession. Who knows how long that's going to take? Could take 6 more months, could take 12 more months. I don't know. But that's what it normally means. And if you go look at some of the other indicators that we've talked about, here's the smooth recession probabilities chart, which is an interesting indicator. As of November, the probability that we're in a recession was only about 1.16%. Nowhere close to these other areas where we actually experienced recessions. Nowhere close to it. And then if you go look at one of the other videos we did recently, the SOM roll recession indicator, it's going up a little bit, but it's still nowhere near the horizontal line up here, which historically is where we've marked the onset of a recession. So look, there's a risk that we get a recession, as we've discussed and we'll continue to discuss, but there's no evidence that it's here yet. And if there's no evidence that it's here yet, then that means that we could still spend plenty of time at elevated valuations. Again, the NASDAQ, when it had this rally, it took the NASDAQ, when the rally started, it took it about 11 weeks to hit that top, and then 17 weeks to double top. So 11 and then 17. For Bitcoin, if it's going to do the same thing, 11 weeks from this low here, where would it put it? It'd put it the first week. Put it next week. Okay, so it'd put it basically next week if it's going to take the first time to double top. The first top of the double top could theoretically occur next week. Coincidentally enough, we have the FOMC next week when the Fed's going to be raising interest rates probably by another 25 basis points. I think 50 basis points investors are considering to be somewhat off the table at this point. And then 17 weeks would put you all the way out in March for a potential double top if it's going to play out the same way, right? So if it were to play out the same way, right, it could be like a top, pull back for a little bit into March, double top. Funny enough, a double top in March would actually correspond to the FOMC meeting in March, right? And one of the videos that I put out just recently, and then we're gonna have to wrap this video up because I'm sure people are getting bored. But one of the videos that I put out recently, I've been trying to challenge myself on this, is if we were to compare interest rates to Bitcoin price action, this is what we're looking at, right? So these are interest rates and Bitcoin price action. And what you'll notice is that when the Fed pivoted over here back in December 2018, that marked the bottom on Bitcoin. And then when they went back to QE, it marked the local top on Bitcoin. And then after their last rate cut, it marked the next local bottom on Bitcoin. So you can see, this here. Pivot to the terminal, or reach the terminal rate. That's where Bitcoin bottomed. Where they started QE, that's where Bitcoin had its local top in 2019. And after the last rate cut in 2020, that's where the final bottom began, or that's where the final bottom was before we entered into a sustained bull run. And this is why I've said many times it could take the last rate cut before you see markets bottom. But while that is probably going to remain my base case, if we were to think about this in another way, so let's try to think outside the box for a minute. One thing to consider is that maybe the market is one step ahead, okay? Which it can often do. Maybe the market's one step ahead. And what do I mean by that? the Fed was raising here in a bull market. This time they're raising in a bear market. So there's always a chance that the market is considering the step down to a 50 basis point rate hike as the pivot to mark the low on Bitcoin. And then when they reach the terminal rate, so let's suppose that the Fed increases rates in February and in March, which would be maybe another 25 basis points each. Let's suppose that happens. Perhaps Bitcoin, that will when it tries to break through the 50-week, and then once they reach the terminal rate, let's say they reach it in May, that what would be interesting is if the market's just front running it, right? Because a lot of people think that when the Fed pauses, the markets are going to rally. But again, what if the markets are one step ahead? Because normally the Fed raises rates when we're in a bull market. Now they're raising rates when we're in a bear market, or at least we've been in a bear market. The terminal rate, once it's reached, let's say in May, so let's say they reach it at 5% or something in May. So let's say right up here. Perhaps that terminal rate, once it's reached, could mark another local top on Bitcoin. And so it's sort of like the market staying one step ahead because the Fed is essentially one step behind, right? The Fed should have started raising in 2021. They didn't, waited till 2022. And so it sort of seems like we're just one step. The market is one step ahead of the Fed. So then perhaps by the time the terminal rate is in, that can mark another local top on Bitcoin. And then once we go sideways, one way to potentially interpret this is why would the Fed stop raising rates if inflation's still high? Well, maybe they think the economy can't handle it or something, and that could be a bad thing. We're getting a little bit off base here, but just something, some thinking, trying to think a little bit outside the box. But anyways, we've gone through the worst case scenario. Again, my opinion, as I said back in the summer, is that the real discussion on whether the bottom is in or not occurs upon the first lower low after the June low. We've had that. Now the question is, does that mark the typical cyclical behavior for Bitcoin, where we've seen a lot of major indicators hit cyclical bottoms, or does it follow the .com crash and experience one last move to the downside after that 60% rally into the 50-week moving average? Because you have to imagine a lot of people probably thought that was the bottom as well on a 60% rally, and it still wasn't the bottom, and we finally bottomed in October of 2002, and then the next bull market began. Hopefully you guys enjoyed this video. I just want to be completely open as to this video series that we've been doing, and this is, I think, sort of the 5th installment of this video series. We'll probably only have 1 or 2 more because in a few months it's either playing out or it's not, and if Bitcoin no longer follows this path, then we might make 1 more video to say that it's no longer a risk. If it does continue to follow the path, then we might need to make 2 more videos to say, all right, it is a risk, it still is following it, and then to follow it through to the end. So that's where we stand. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, check out Into the Cryptoverse Premium at intothecryptoverse.com, and I'll see you guys next time. Bye.